Good morning everyone, this is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 3rd of January. Dollar begins the year on a strong footing. The dollar outperformed most of its counterparts on Monday, starting the new year on a strong footing after it retreated last week. The greenback ended 2016 with its strongest quarterly rally since 2008, boosted by market expectations that increasing fiscal spending under President-elect Trump's administration will result in higher future inflation, which in turn may lead the Fed to respond by increasing interest rates at a faster pace than previously projected. January is by far the best month on the calendar for the US currency, confirmed by the fact that its monthly gains over the past 30 years average at around 1%. Therefore, this, combined with the aforementioned fundamentals, make us believe that the dollar could remain underpinned at least in the first few months of 2017. We stick to our guns that the best proxy to exploit further USD gains is dollar-yen, given the Bank of Japan's policy framework to keep long-dated Japanese government bond yields near zero. Dollar-yen traded higher after it hit support near the 116 barrier, and during the early European morning Tuesday, it is trading near the short-term downside resistance line taken from the peak of the 15th of December. We believe that the prevailing trend remains positive, and thus we expect a decisive break above the aforementioned resistance line and the 118 obstacle to signal a trend resumption. Such a break could initially aim for the 118.60 resistance marked by the peak of the 15th of December. Another break above that hurdle is possible to set the stage for more bullish extensions, perhaps towards the psychological zone of 120. Overnight, China's final Caixin manufacturing PMI for December was revised up to 51.9 from its initial estimate of 50.9, beating the forecast of a slight downside revision to 50.7. This adds to the basket of evidence that the Chinese economy has started to stabilize, and as such the currencies of the nations with strong trading ties to China, like Aussie and New Zealand dollar, traded higher in the aftermath of the release. However, we remain skeptical as to whether the recovery in these currencies could continue in the foreseeable future, mainly due to fears of further devaluation of the Chinese yuan. One may argue that a weaker currency is a good thing for China, as it would make exports even more competitive. However, a rapid depreciation poses risks to financial stability and makes the economy's transition towards a consumer-based structure even harder as imports become more expensive. Therefore, this may adversely impact Aussie and New Zealand dollar, given that Australia and New Zealand rely heavily on China for their exports. Aussie dollar edged north after it hit support once again near the key obstacle of 0.7160. The rate has been oscillating between that support and the resistance barrier of 0.7245 since the 22nd of December, and as such we consider the short-term bias to be flat at the moment. Even if the rate continues higher in the days to come, the broader trend of the pair is to the downside, we believe. On the 11th of November, Aussie dollar fell below the upside support line taken from the low of the 20th of January 2016, and since then the price structure has been lower peaks and lower troughs. Thus, we would treat any further short-term recovery as a corrective phase of the larger downtrend. As for today, in the UK, we get the manufacturing PMI for December. Expectations are for the index to have ticked down, but to remain well above the key 50 mark. Even though this could hurt sterling somewhat, we believe that as long as UK PMIs remain well within the expansionary territory, they are unlikely to change the Bank of England's view that the economy continues to perform well after the referendum. From Germany, the preliminary CPI for December is due out just one day ahead of Eurozone print. The forecast is for Germany's CPI to have accelerated notably in December, something that may heighten expectations that the bloc's print may follow suit. In the US, the ISM manufacturing PMI for December is expected to have risen somewhat. For more information, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.